Now, Ameera Shah also joining us, MD Metropolis Healthcare on earnings this time around. Ameera, thanks so much for being with us. Volumes in Q1 were strong, above 17%. What led to the strong volume growth, and do you expect it to continue?
So I think it's been a good start for the year for us. So it's been a very healthy start, and I think even though the first quarter is a very lean quarter for the industry, I think Metropolis has managed to pull off some very healthy volume numbers. I think this is really connected to 2-3 things that we've doing, very in line with our strategy that we've been quoting. Number one, we've been focusing very much on the B2C side of the business and really trying to go closer to the patient. In our focus cities like Bombay, Chennai, Bangalore, Surat and Pune, where we already have a strong brand and strong operational infrastructure, what we didn't have was density in these markets. So what we've done is we've really built a network of collection centers that can go closer to the patient, making it easier for them to choose to move from the unorganized sector to us, supported obviously by very good quality and good quality of services. So I think that's been one, the retail expansion. I think number two, the wellness side of our business, which traditionally has been a smaller component, has grown at 40%, and therefore we've seen the contribution, wellness contribution to the overall business increase as well. I think that's another thing that has driven some of the growth and some of the institutional contracts. I would say these are the three major pillars behind the good numbers that we've seen.
Morning, Ameera. Nikunj also joining in. If I look at the lay of the land, at least in the diagnostic space, suddenly everybody is aggressive. You know, on a daily basis, if not one, sometimes two, sometimes three, I get messages that get your glucose level checked for 25 rupees. How do you measure the kind of disruption which is happening on the price front by both listed and non-listed players?
Nikunj, if you probably see your own example, probably you're not responding to any of these messages or going to these particular labs to do the test at 25. Because at the end of the day, when it comes to your health, what's most important to you is that you get a quality report that you're actually able to act on. If you get some, cheap tests done at a cheap value somewhere which are incorrect, you go to the doctor tomorrow, the doctor's probably going to throw the report and say, look, this, go get it done from a good quality lab. So I think, yes, while there is pricing and affordability do matter in healthcare, the interesting thing about the diagnostic space is most people come to a diagnostic lab only once a year. And the average ticket size is hardly 600-700 rupees. At that point, when you're talking about your health, what you're more focused on is the trust and the credibility versus going and negotiating a 50 rupees discount somewhere. So we find that, the customer segment that we are focused on is quality conscious, does want to make sure that they're reassured, and is also focusing on the experience that they're getting. I mean, we have to remember there's a value for hygiene, for safety, for a professional service, for getting your reports on your mobile phone in a few hours, with trend charts. And I think our customer base actually appreciates it. So we don't find the pricing issue to be the biggest issue going forward.
Curious to know, have you ever got those 25 rupee glucose tests done?
No, my whole idea is that I may not go and I may not respond like Ameera is saying, someone would be. I mean, are we looking at a large disruptive wave, and will price be a disruption now going forward? I mean, I respect that, we can afford in South Bombay, but price could be a temptation point for others. That's my limited point.
Right. Ameera, coming back to, certain segments as well.
I think price...
Right. And I'll let you also, respond to Nikunj's point. But we believe that wellness contribution under True Health has witnessed quite a strong growth year on year as well. Again, on that front, do you expect that to continue? More than 40% is what we've seen.
That's right. I mean, today wellness contributes quite a small portion to our business, so the base is quite low. It used to be about 5.5%. It's increased now to about 6.5%. And we do expect this pace of growth, to continue because we are still at a low base. So hopefully we can keep doing enough initiatives that can keep increasing the wellness contribution. However, a slowing economy does affect things which are not need-based. While we believe, of course, wellness is need-based, it's not as need-based as illness. So we are hoping that there is no slowdown affecting it. We haven't seen it in the first quarter, but we'll have to see how it plays out in the next couple of quarters as well. Just back to Nikunj's point, I agree with him. I think pricing does impact. It does create a wave, and customers who are not as discerning, patients who are not as clued in on quality will get and potentially get affected by this pricing. So yes, I do see wellness being a far more competitive space where pricing and consumer differentiation will matter. But I think on the illness space, I think there is a less of a pricing impact because people are more careful when they are sick and they want to make sure that they've got the right test, because it's not just their decisions, it's also the doctor's decision that plays in.
Exactly, you think you would be differentiating your growth from last 5 years versus next 5 years. Last 5 years was about expansion, it was about creating a franchise, it was about creating this great brand, Metropolis. Next 5 years, would you be looking at expanding? Would you be looking at cost cutting, innovation, or would you be looking at increasing your spend per customer?
I think in a very vibrant modern India, I think 5 years, frankly, is too long a period to look at. I think we would probably look at a 1 or 2 year period at this point of time. I think I would say in the next 1 or 2 years, our expansion will continue. We will continue to build the brand, continue to really invest in making sure that consumers are finding their differentiated experience at Metropolis like they have, and continuing to really technologically stay ahead of the curve. Because one of the biggest differentiators of Metropolis is we have the largest test menu. So pretty much everything that's available globally is available in India through the Metropolis group. So I think these are the things that we'll continue to do. Having said that, I think managing your costs is equally important. Keeping the base and keeping your balance sheet and P&L light is equally important, because when things do get tough, I think it is the strength of the balance sheet and not having too many fixed costs that keeps you out of risk. So I think we are therefore building an asset-light model. Today, 87% of our network is asset-light in terms of collection centers, and almost 15% of our labs are asset-light in terms of infrastructure. So by doing that, I think we're trying to keep ourselves a little bit risk-free, and I think we'll continue down this line for the next couple of years.
Great to have you on the show with us today, Ameera, and speak candidly really on where the next trajectory for Metropolis is really headed. Good to speak with you as always.